Hello and welcome to the Friday market update. Well, I've got some pretty good news. We're starting to see the mortgage rates move in the right direction slowly but consistently. They dropped from 6.39% at the start of the week down to 6.29%. We'll take it. And that's according to Mortgage News Daily, my favorite website that nobody likes, but go to it if you have any questions regarding where mortgage rates are headed. So nothing dramatic, no massive drop overnight, but a steady easing, and that matters. And right now, the market is in what I call kind of a wait and see mode. Wall Street has basically been on standby, trying to figure out what happens next with the global situation, the war in Iran, especially. That's been driving so much uncertainty. And when you look at what's really been moving mortgage rates lately, it comes down to one thing: oil. Oil has been the story, not jobs, not the Fed, not even housing. It's all about oil. So let me give you some perspective. We saw oil prices spike from about $67 a barrel right before the war all the way up to $117 a barrel. Now, that kind of move gets everyone's attention because when oil jumps like that, inflation fears jump with it. And when inflation fears rise, mortgage rates follow. And that's exactly what we saw. Rates pushed higher to 6.64%. We were in the high fives as the market reacted quickly to the possibility of prolonged inflation tied to the energy costs. Now, here's where it gets interesting. As the war intensified, something else started to creep into the conversation: recession. Wall Street started asking, are we headed toward a slowdown in addition to potential inflation? And when a recession fears enters the picture, money starts moving into safer assets like treasury bonds, including mortgage-backed securities. Now, this actually helps bring mortgage rates down because they're moving money from this section over to the bond section, which is more of a safe haven. So even in the middle of all that uncertainty, even at the peak of oil prices at $117 per barrel, we actually started to see mortgage rates ease a little bit. Now, fast forward to today. We're starting to see signs that things may be stabilizing. The Strait of Hormuz is now open and oil tankers are free to pass. Tensions appear to be heading towards some level of resolution. And oil has come back down to around $85 a barrel, down from $117 a barrel. And that is a great trend. And we see that going down further. Now, that's a big move in the right direction. And it's one of the main reasons we're seeing mortgage rates slowly trend downward again. So what does all this mean? What does it mean for you, for the real estate market? It means the pressure that pushed rates up originally is starting to ease. And if this trend continues, if oil continues to stabilize or even move lower, there's a very strong case for mortgage rates to continue trending down from here as well. Again, not overnight, slowly but surely, but directionally, we're moving in the right direction. We're moving in the right way. Now, here's a part that matters for you. When you're working with your buyers, this is one of those moments where the headlines really don't match the opportunity. Because while the market has been sitting back in a wait and see mode and buyers are sitting back, opportunities are quietly opening up. Less competition, more negotiating power. Buyers have been hitting the pause button, and some who have actually canceled escrow due to the uncertainty. The seller that just had a escrow canceled, they just wasted 30 days on the market for their property. Do you think they may be willing to give some kind of seller concession to get a new buyer in and close quickly? And in many cases, seller concessions are still on the table. So that combination doesn't stick around forever. Typically what happens is this: 1, mortgage rates improve. 2, confidence comes back. And 3, buyers jump back in. Hooray, rates are lower. Let's jump. Let's go buy. And those opportunities disappear quickly. So if you've got buyers who have been on the fence, just understand this: the market almost never gives you perfect clarity and perfect opportunity at the same time. It's virtually impossible to time the market. In real estate, I say this all the time: it's time in the market. It's not timing the market. And right now, we've got improving conditions, but we still have hesitation in the market. That's where the window is. And as always, our job is to help make sense of it for you and for you to educate your buyers on when they should purchase and what time. So to show you what this means for the monthly payment, your cash to close, and how to structure things in a way that actually works in today's environment. Because at the end of the day, it's not about guessing where rates go next. It's about market making a smart move based on where things are today and putting your buyer in a position to win. We'll keep watching it closely. But for now, the trend is your friend, and the trend is pointing down. Mortgage rates are coming down. Now, as a quick reminder, we have our seminar coming up next week, Winning the Listing Presentation, and that is on Tuesday, April 21st at 9 a.m. at the Canyon Gate Country Club. We'll be giving you many tools for your tool belt to win the listing presentation. We know firsthand what's important to buyers that your seller needs to know. You can still sign up. We have well over 50 agents already registered. It'll be a fun event full of great information you'll walk away with. And guess what? You get to see me for a couple of hours. What better way to spend your Tuesday morning? Free coffee, donuts, danishes, and me. Well, anyways, have a great weekend, and we'll see you next week. This is Gaylord out. Bye-bye.